Hi everyone, Piers Bolger here, the Chief Investment Officer at Viridian. Well, last week was one of the most tumultuous weeks that we saw in financial markets since the worst of the GFC back in 2008. Not only did equity markets continue their March sell-off, we actually saw during the middle of the week that bond markets also followed suit as investors sought the safe haven of cash and were pretty much looking to liquidate any form of investment that they had across their portfolios. Treasury and bonds being the most liquid part of the market also experienced, as I said, that sell down. We've had another couple of queries from clients just regarding then, is there any value that the Australian dollar can bring to bear in a portfolio sense when you're thinking about investing in offshore markets? And it is really important when considering investing in global markets, whether it be bonds or equities, that you consider the impact that the Australian dollar and the moves in the Australian dollar can have on your total return. And I just want to highlight this point with the associated chart. You can see here, this is a relationship between the Australian dollar and the US dollar, as well as a relationship of the Australian dollar to a basket of currencies of our major trading partners, known as a trade-weighted index. And you can see here that the Australian dollar does move in a pretty volatile manner. Australia has been historically known as a commodity-based currency, so whether it be in terms of agriculture or mining exports, the demand for the Australian dollar is very much to, as I said, commodity prices and the growth outlook on a global basis. And you can see through 2008, 2009, the worst of the GFC, the Australian dollar was sold off as the demand for commodities and related export materials declined, only to ramp up again once the growth outlook improved, particularly in relation to Asia and certainly in terms of China, given the demand for coal and iron ore as an example. More recently, we've continued to see the Australian dollar sell off, and you can see there that the Australian dollar's touched well below now 60 cents to the US dollar and continues to fall against our major trading partners. So what's the value of this from an investment point of view? And it's really important when you think about that, as I said, in terms of investing offshore, because when you're investing in offshore markets and the Australian dollar declines, it does provide some buffer to the overall performance of your portfolio. Because when you translate those offshore earnings back into Australian dollars, in effect, you're getting a better Australian dollar return. And just to highlight this point, even though, as we said, March has been a really difficult month for financial markets, the ASX 200, the domestic Australian share market, is down roughly around about 32%. But when you're looking at global equities on an unhedged basis, so when you're investing in global markets, on, as I said, not trying to hedge the currency or reduce your currency exposure, returns are still negative, but they're down 15%. So half of what it would have been when investing just in the Australian market. So when you think about investing, it's one of the reasons why we continue to focus around managing diversity across a portfolio. When you think about investing, the mix of having both some level of Australian dollar exposure as well as having a majority of foreign market exposure is particularly important, just in terms of balancing out the overall return, rather than having it all in one currency where that's your sole exposure that you're going to get, and then ultimately the sole return that you get based on that asset class and that currency exposure. So when we think about investing, even though we are clearly looking into very challenging times from a financial markets perspective, the Australian dollar can provide a little bit of a buffer to investors, particularly when investing in offshore markets. And as I said, even though the Australian dollar has fallen, that buffer, when translated back in terms of overall investment returns, as I said, can mitigate some of that downside risk. As always, if you have any queries, please feel free to reach out to your advisor, and we look forward to catching up again soon. Bye for now.